If I had a time machine, then what you're going to be learning in this video is the exact study guide and lesson plan that I would go back in time and give myself at the beginning of my trading career. This lesson plan and this study guide would have saved me thousands of hours of scouring through YouTube videos trying to learn how to trade on my own. This lesson plan is an organized step-by-step process that I wish I would have known at the beginning of my trading career, again, to speed up my process to becoming profitable. And today, I'm going to be sharing that with you. So if that sounds good, go ahead and click that like button for me. Go ahead and subscribe if you are new, and I'll be right back to share with you a 2024 study guide to becoming profitable. Welcome back. Let's go ahead and get started. What you're going to be learning is an 8-month plan that takes you through everything you're going to need to know in a step-by-step way each and every month, learning something that builds on top of the last month until you get to a point of actually profitable trading. So let's go ahead and get started with month number 1. Pretty obvious here. Month number 1 is going to be mastering the basics of the market you're trading. It's kind of crazy to me how many people, including myself, start out their trading career and don't master the basics of Forex before they open a live account and try to start trading a strategy. They do that before they know how to calculate a position size in order to risk a small amount of their account. They do that sometimes before they really understand the buy and sell orders on the trading platform they're using. I've done the same exact thing, especially at the beginning of my trading career. Understanding the basics is extremely important. And obviously, if you already know the basics, you can skip this step. But if there's any of these 13 things that you do not have a complete understanding of, then it's time to go back to the drawing board and learn whatever it is that you don't know. Because if you don't, it's going to set you up for failure in the long run in your trading. So let me briefly go through these. I'm sure you guys can read, but let me go ahead and try to read myself. I'm slightly dyslexic, so it might be difficult. But number 1, you obviously need to know what a currency pair is if you're gonna be trading in Forex. You will need to know what a pip is. You'll need to know how to calculate the value of a pip. You'll need to know what leverage and margin are. This is a huge one that I see beginners and struggling traders that have been trading for up to a year sometimes still don't have a grasp on leverage and margin and how they work. That is a problem. That's something you're going to need to study and figure out before you continue trading with real money. Next up, we have the different types of brokers and how they work. There are market maker brokers and ECN brokers. You need to know the difference in how they work so you can pick the broker that best fits your needs. You need to master a trading platform. I personally use TradingView. You need to know what a long versus a short trade is. You need to know what entry stops and targets are, what the types of orders in trading are, limit, stop, and market orders. You need to know how to place entry stops and targets in your specific brokerage account. You need to know the different position sizes in Forex and how to calculate a position size. And you need to know what a spread is and how that works before you ever start trading live. And these are things that I think you can master within 1 month pretty easily. You should be able to get through this within a couple of weeks if you have a decent amount of time to spend learning how to trade. But I'm thinking of someone with a 9-to-5 job that only has a couple of hours a day. It may take up to about a month to learn all of these different things. Now, I've also put this where you can just type in each of these into YouTube or Google, and it will give you the lessons you need. For instance, if you type in Google, what is a currency pair, that'll give you what a currency pair is, so on and so forth. So you can essentially just type in what I have here, and that could be how you study each of these. And I'm confident that you can master this, like I said, within 1 month. So month number 1 down, you have to master the basics. Let's move on now. What would I study in month number 2 if I wasn't profitable yet in 2024? Month number 2 is when things actually get fun. After mastering the basics, you're now going to master charts. You're going to master the ability to read a price chart. And that all starts with number 1 on this list, which is understanding the anatomy of a candlestick. After that, you're going to need to understand how to read an entire candlestick chart based on a lot of different candlesticks. After that, you're going to need to learn how to identify a trending market. Then you'll need to learn how to identify important structure levels. After that, we're talking about candlestick patterns. My favorites are the engulfing and hammer / upside down hammer, shooting star, whatever you want to call it. Those are my 2 favorite candlestick patterns. Chart patterns are the next step on this list. My favorite chart patterns are by far double bottoms and double tops, followed closely by head and shoulder and inverse head and shoulder patterns. Next up, we have breakout patterns like flag patterns and just consolidation breakouts in general. And after that, of course, you can learn about indicators if you choose to use them. Now, in terms of just strictly price action, 1 through 7 is all you'll need to study if you're just going to be a strictly price action trader. But if you want to incorporate indicators into some of the strategies that you're going to be using or building later on, then you'll want to learn about indicators as well. My favorite indicators are the RSI, EMAs like the 50-period EMA, which is my favorite EMA to use, and the ATR indicator, which gives you the average of the last 14 candles. So those may be some indicators you want to study. Now, again, I've laid this out in a way where you can literally just type this into a Google or YouTube search in order to learn about any of this. A lot of you may already know the anatomy of a candlestick, how to read a chart, things like that. Again, skip any of this that you already know, but if there's things on this list that you don't know yet, then go back and study it, because this mastery level understanding of candlesticks, chart patterns, breakout patterns is going to be the foundation of trading strategies that you're going to have to build or learn in order to ever be profitable. So you want a solid foundation. You want to understand all of this like the back of your hand. You have to know all of these things in order to ever combine them into a trading strategy. So that's why it's important that you master these things now. So again, month number 2, this is what I would master in order to put myself on the path to profitable trading by the end of 2024. In month number 3, I would spend my time developing or learning a profitable trading strategy. Now, learning a profitable trading strategy is very obvious. You just go online, you search profitable trading strategies, you find one that fits your personality, you test it in historic data and see if it is in fact profitable. That's pretty easy. Let's talk about developing a profitable trading strategy though. So in terms of developing a profitable trading strategy, all we're going to be doing is taking all the technical factors that we talked about in month 2, and we're going to combine a specific number of those in order to create a strategy. I think it'll be easiest for me just to do this with you very briefly here on the chart. So as you can see next here, I have CEST. This is how I create strategies in order to make sure that they are rules-based enough for me to follow. At first, I have conditions that I have to see before I look for an entry reason. Conditions could be things like the trend of the market is up or down. The market is at a major level of structure. The RSI indicator is overbought with divergence, oversold with divergence. All of those would be examples of conditions. So I have specific conditions I must see before I even look for an entry reason. And I have to have rules for those conditions. So a strategy is essentially just the rules that we follow before we can actually execute a trade. And a strategy is extremely important so that we stay consistent. We don't swap the way we're trading constantly, because doing that is a recipe for disaster. You need a trading strategy in order to be profitable. So this is the way we're going to build one. Conditions first, then we're going to look for identifiable entries that are rules-based. After that, we need rules for our stop loss and rules for our target. I call this CEST, and I'm going to go ahead and show you this kind of in action on the chart now. So one of my favorite strategies to trade is something I call the OTZ system, which stands for Optimal Trading Zones System. The way this works, and it's an actual rules-based strategy that I developed, is I look for prices to be in a specific trend. We'll go downtrend on this one. So condition number 1 would be market in a downtrend. I then look for a major level of structure that market pulls back to. So here we have market in a downtrend, making new lower lows, also making new lower highs. We're in a downtrend. We have a major level of structure right here that I identify as the previous level of support that was broken, and it also has been tested multiple times. So that's condition number 2, is I need that level to be there. After seeing that, I want to see a chart pattern occur right here at this level. So as you can see, we're just combining everything I talked about in month number 2, which is we're combining trend with a major level of structure and now a chart pattern, which would be a double top in this case. All of those would fall under conditions for this strategy. What's after conditions? I want to look for an entry reason. An entry reason for me is going to be a candlestick pattern after the double top. So for instance, if I got the double top and then we see a shooting star candle or an upside down hammer right there at the end of that double top, that would be an entry reason. What I mean by entry is that candlestick would be the real reason that I press the sell button, in this case going short. Then I have to have a rule for my stop loss. In order to have a complete strategy, I need to know where I'm getting out if I'm wrong about a trade. So my stop loss would go above the highest high of that double top, and I need to have a rule for my target. That's what the T stands for. So the rule for the target may be something like at the previous swing low is where I'm placing my target. So this is what that trade setup would look like. And this would be the full strategy and all of the rules based on conditions, entries, stops, and targets. And in month number 3, this is what I would do. I would develop or learn a profitable trading system, because that is something that's going to be pivotal in your success as a trader. Now, we have plenty of trading strategies available here on the channel. Feel free to look through any of them that you would like to. And also, don't be scared to try to develop your own strategy just by combining a number of conditions along with a specific entry reason, specific rules for stops, and specific rules from targets, all based on what you learn about in month number 2. So that would be my plan for month number 3. Now, on to month number 4. This is the month where you need to be really careful. If you live with a spouse, make sure they understand that you are going to be moody, you are going to have headaches, because the backtesting process is one of the most frustrating things I think I've ever done in my life, but it is absolutely necessary. And before I get too far ahead of myself, let me explain what backtesting is for you. Backtesting is going to be the process of taking the rules-based strategy that you have either developed or learned from someone else, going through historic data on a chart on a specific currency pair and a specific time frame, and documenting every time those rules were met. Every time you would have had a trade based on that strategy throughout at least the last 100 instances that it happened. That is the process of backtesting. Now, why do we do this? Well, for one thing, we want to make sure that the strategy we're trading has been profitable over at least the last 100 trades, because that tells us that it's likely to continue being profitable. Another reason we do this, and probably the biggest reason, is because during this backtesting process, backtesting is one of the largest levers we have for our trading psychology to improve our mindset, our trading psychology, and our discipline. And the reason for that is during the backtesting process, you're going to see the rules-based strategy you've created or learned go through drawdowns and go through losing streaks, but hopefully come out the other side profitable. And seeing that firsthand through the backtesting process will make it easier when you're trading live and you have inevitable losses. Every trading strategy will come with some losses. Every trading strategy will have drawdowns, and you need to be prepared to deal with those when you're live trading. Backtesting and seeing it happen in the past is one of the best ways to prepare yourself for those drawdowns in the future when you are, in fact, trading with real money. Now, on the channel, we have a full tutorial that talks about how to backtest and shows you a full tutorial on how to do it properly. Feel free to check that out. This video is more of a study guide, so I don't have time to explain exactly how to backtest throughout this video. But again, we have videos on the channel that'll teach you how to do everything that we have talked about so far up to month 4 and everything we're going to talk about later in this video. So treat this video, again, like a study guide and go back to all of these and look at them as lessons that you have to learn before you're going to be able to be a profitable trader. But the backtesting process, after you learn how to do it through that video or any other video you watch on backtesting, is going to be something you have to do yourself. Because again, you need to see the strategy go through drawdown and come out profitable. You need to see the strategy have losing streaks but still be profitable at the end of a 100 trade sample size to improve your own trading psychology. Now, once you've backtested multiple currency pairs, that's when you're going to step into the process of optimizing your trading strategy. Now, what does this mean? Different currency pairs are going to have different personalities. What that means is that you may have a trend continuation strategy, and there's certain currency pairs that trend really well. A lot of the yen pairs tend to trend really well. So what will happen is if you try to trade a trend continuation strategy on a currency pair that's notorious for being a consolidating pair, then that strategy is not going to perform as well on that consolidating pair. So when we're optimizing, what we're doing is picking out the best currency pairs for the specific strategy that we're trading to give ourselves the best odds of being profitable with that specific strategy. And another thing you may want to optimize for is what times does the strategy perform the best? Are there certain times that it doesn't perform well? So what you're going to do in your backtesting process is document when you're placing that trade and if that trade won or lost. What was your reward to risk ratio on that specific trade? And out of a 100 trade sample size, did that make money on a specific currency pair? And then you're going to pick the top performing currency pairs after you've backtested a handful of pairs. And that's the optimization process that you will need to do after backtesting. So month number 4 if I was not quite profitable and I took the correct steps month 1 through 3, I had the basics down, I knew how to read a chart, I understood everything I needed to know about candlestick charts and indicators, I developed a trading strategy. In month number 4, I would spend the entire month backtesting and optimizing the trading strategy that I developed in month number 3. Month number 5 for me would be all about risk management. Now, risk management is self-explanatory. It's literally you managing risk inside of your trading account, but I have a very specific way that I do this that I'm going to explain in just a second. And we also have very detailed videos diving into risk management here on the channel. Feel free to check those out. But risk management to me is broken down into 3 different categories. First off, we have what is called risk capital. Now, risk capital refers to the amount of money you start your trading account with. And by the way, there are no right or wrong answers to any of these. Everything about your risk management plan needs to be personalized for you. Every person on the planet has varying risk tolerance, which means you may have a very high risk tolerance and you may want to put most of your life savings into a trading account, whereas someone down the street doesn't have that kind of risk tolerance and they only want to put a very small portion of their net worth at risk in a speculative trading account like a Forex account. So risk capital is the first stage of a good risk management plan, and that's going to be the amount of money you actually put at risk in a trading account when you're doing something as risky as Forex trading. Next up, we have risk per trade. This simply means how much money are you willing to risk on each trade you place. For every trade that you place, you need to have an area, even a stop loss order, for me at least, that's what I use, but you need at least an area where you know I'm wrong about this trade and I'm going to get out and accept my loss. Accepting that loss means you're going to lose a specific amount of your account. Risk per trade means what am I willing to lose on a trade? For me, this number is between 1 and 3%. There is no wrong answer here. You could be very risk tolerant and go, I don't mind losing 10% per trade. You could be very risk averse and go, I don't want to lose more than 0.5% whenever I'm risking money on a specific trade. But if I was a complete beginner and did not have all my ducks in a row in terms of knowing exactly how to trade, then I would be risking a very small amount of my account value on every trade, because obviously if you're risking 10% of your account per trade that you place and you don't know how to trade yet, you are very likely to blow your account. Now, the third part of a good risk management plan is overall exposure, and this just means how many trades are you willing to be in at once. I'll give you an example of this to make it easy. Personally, I can only be in 5 trades at once at a 2% risk. The reason for this is if I lose all 5 of those trades because of some crazy news event where the markets are going nuts, then at that point, I'm going to be losing 10% in like a flash, in the snap of a finger. That's tough, but it's something I'm willing to deal with. And that is my overall exposure rule, is that I can be in 5 trades at once, or in other words, I can have 10% of my account value at risk at any one given time. So overall exposure is just how many trades can I be in at a specific risk. And these are the 3 things that in month number 5, I would take and consider after, again, feel free to watch a couple of the more detailed risk management videos that we have here on the channel. Feel free to study risk management throughout month 5 as well. But after studying it and really comprehending it above what I've just told you, this really brief version, after you actually comprehend it, it's important to sit down and think and consider very carefully what you want for your risk capital, for your risk per trade, and for your overall exposure. What are numbers in all 3 of those that will keep you out of your emotions when you're trading? To give you another brief lesson, obviously, if you're risking 10% on a trade, you are going to be highly emotional if that trade starts going south, if it doesn't go your direction. Whereas if you're risking 1% or less, you're going to be a lot less emotional on that trade. So risk management is going to be a lever we use again to manage our emotions, keep our mindset right, to help with our trading psychology and our discipline. So make sure the numbers you choose keep you in a good emotional state while you're trading. So month number 5 is master risk management and develop a risk management plan. That's exactly what I would do in month number 5 if I could go back in time and give myself this study guide at the beginning of my trading career. In month number 6, I would focus entirely on mastering trading psychology. If you allow emotions to make your trading decisions for you, emotions like fear, and greed to be the reason why you're making decisions, while you're trading with live money, then it is almost inevitable that you will blow your account. So being able to manage those emotions is extremely important. And that's why it's so important to master trading psychology. Now, for me, one of the biggest influences on my own trading psychology, and one of the people I watched, read, and listened to the most when trying to master my trading psychology was a guy named Mark Douglas. So I would suggest in month number 6 that you go back and start reading, watching, listening to everything you can by Mark Douglas. When you do, if you've ever seen any of our videos on trading psychology, you will see a lot of parallels. We see trading psychology in a very similar way. So that would be the first step in mastering trading psychology in month number 6. Now, we have some things that we can use as levers to improve our trading psychology and to keep emotions out of our trading. These things are using proper risk management. Now, although risk management isn't trading psychology, they are parallels. They go together, and the reason they go together is because the more you are risking of your hard-earned money, the more emotional you're going to be and the harder time you're going to have controlling your emotions while you're trading. So using proper risk management is one of the levers we have to improve our trading psychology. Number 2 is going to be to backtest your trading strategy. As we've already talked about, backtesting, you'll see your strategy go in and out of drawdowns. You'll see your strategy have losing streaks, but then come out the other side profitable, and that will improve your trading psychology. It will help you when the time comes and you're live trading and you see a strategy start to go through a drawdown. When you're live trading and you see 2-3 losses in a row, you can look back at your backtested data and you can tell yourself, oh yeah, this is perfectly normal. It's exactly what happened throughout my backtesting. The next thing is to have proper expectations. Trading is not a get-rich-quick scheme, no matter how many marketers try to tell you it is. It's going to be something that takes you a fair amount of time to master, and then you'll have to save up money or work with a prop firm in order to have the capital to really start affecting your livelihood, to really get to a point where you can quit your day job. That's the process you're going to have to do, and that's going to take longer than most beginners think. So keep that in mind and try to have proper expectations around your trading. Number 4 is demo trade the exact strategy that you plan to trade live. I see a lot of beginners making this mistake. They will jump into a demo account before they've created a strategy, before they have any rules. They don't have a trading plan. They just create a demo account, jump in, and start trading. That does not help you at all, other than helping you figure out the buttons to click in order to buy and sell on your trading platform. It really doesn't do anything for you to demo trade that style. Now, what does help is demo trading a strategy you've created that you've already backtested using a risk management plan you've already created. If you do exactly what you're going to do when you start trading live in a demo account, that's something that can really improve your trading psychology as well, because again, kind of like backtesting, you're getting to see the strategy that you're going to be trading live go in and out of drawdowns and stuff like that, but you're not having to risk real money yet because you're doing it in a demo account. And what that's going to do, just like with backtesting, is when in live trading that scenario happens and you lose a couple of trades in a row, you have already seen it in your demo trading. You've already seen it in your backtesting, so your emotional state doesn't get affected nearly as much as it would if you didn't take these steps, if you didn't backtest and you didn't demo trade. So month number 6 would be all about trading psychology for me if I was starting over as a brand new trader. Now, let's move on to month number 7. So in month number 7, if you followed all the other instructions correctly through the previous months, you will have a full trading strategy or multiple trading strategies that are rules-based, that you've already backtested and seem to be profitable in historic data, and you will have a full risk management plan that you think will keep you out of your emotions based on your own risk tolerance. Month number 7 is going to be one of the easiest months you have, and it honestly should not take you anywhere near a month, but essentially all you're going to do in order to create what we call a trading plan is write out the strategies you're going to be using along with all the rules, and write out your actual risk management plan. Now, this trading plan is exactly what it sounds like. It's something that you're going to take and read every morning, and this is the plan you have for every single day that you trade. This will keep you from switching strategies, keep you from trading based on emotions or trading out of greed just because you want to make money that day. Instead, you'll have a written plan that you have to follow every single day. And the beauty of this is it's a plan that's already proven to be profitable through your backtesting process. And writing this down and having it beside your desk, whether you write it down or put it in a Google Doc, whatever you choose to do, is something that will be extremely helpful as you begin to live trade. So simple enough, month number 7 is write down all the rules you've already created, create your full trading plan. Now, in month number 8, if I was not profitable yet and I'd followed the steps all the way up to this point, this is when I would start a demo trading account. And this is when I would start demo trading the exact trading plan that I created in month number 7. Now, this demo trading process is meant to, one, ensure that you can actually exploit your strategy with all of your prior obligations. You may have to sleep, we all do, so that's going to be something that gets in the way, whereas when you were backtesting, it didn't get in the way. You may have obligations like children or obligations like a full-time job that you didn't account for in your backtesting, so this demo trading is going to be you actually placing trades using your full strategy to make sure you can do it even with all of your other prior obligations. Now, this demo trading process also is meant to improve your trading psychology, as we've already talked about, and so for that reason, I always suggest a demo trade anywhere between 1 and 3 months. If you can get to that 3-month mark, you normally get to see your strategy go in and out of a drawdown within a 3-month period, within a 90-day period. So that's what you're really looking for in this demo trading process, is you want to see your strategy go through a drawdown and then come back by the end of 90 days profitable. Obviously, you can choose how long you want to demo trade. If you want to demo trade longer, that's completely fine. If you want to do a little bit shorter, that's completely up to you. But just make sure that you are completely comfortable with all the risks involved in trading, and that you're completely comfortable with the trading platform you're using to place trades, and that you're completely comfortable with all the rules you've created for your full trading plan before you decide to trade with real money. And again, I'm going to stress this, whenever you're doing this demo trading, I know it's not real money, but it is extremely important that you follow the exact rules you've set forth for your full trading plan when you're going through this process for 1 to 3 months or longer, depending on what you would like to do. And after this demo trading process, congratulations, you're ready to trade live, of course, whenever you feel comfortable. Let's do a final recap on your 2024 study guide to becoming a profitable trader. Month number 1, you're gonna master the basics. Month number 2, you're gonna master candlestick charts. Month number 3, you're gonna develop or learn a trading strategy. Month number 4, you're gonna backtest and optimize that strategy. And in month number 5, you're gonna develop your own risk management plan based on your risk tolerance. Month number 6, you're gonna master trading psychology by reading, watching, and listening to everything you can find from Mark Douglas, along with implementing the levers that we have that we can use to improve our own trading psychology, like risk management, backtesting, and demo trading. In month number 7, you're gonna take all the rules that you've created for your strategy or strategies that you plan to trade for your risk management plan, and you're just gonna write them down in what we call a full trading plan. And in month number 8, you're gonna start your demo testing process with this full trading plan so that you can see it go in and out of drawdown and get accustomed to trading your strategies using your risk management plan in a live market scenario. Now, obviously you can feel free to go just Google or YouTube search all of these lessons that I've shared throughout this video, using this entire study guide as a lesson plan to becoming profitable in 2024. But we also have some space available in the TTC Forex University where we go through each and every one of these in order in a very organized university style course. And along with that, you'll get guidance from me personally. This is a mentorship program. You can ask me any questions that you have. It'll be me personally getting back to you. On top of that, we also send out 3 to 5 email alerts per week of trades I'm actually placing based on the strategies you're learning in the course. And you'll get access to the Pro Trader Report, which is a report I send out every Monday talking about the levels of structure I'm paying attention to for possible trades and the trades I'm looking to take coming up in the week ahead. So if that sounds interesting to you, go ahead and click the top link in the description or go to www.ttcfxuniversity.com to find out all the details on the TTC Forex University. If not, that's completely fine too. Just make sure you go ahead and click that like button for me if you made it all the way to the end. Subscribe if you are new. Comment that you made it to the end, and I'll try to like every comment that made it this far. I know this video probably wasn't as exciting as watching me trade or watching me analyze a chart, but this was a literal study guide and lesson plan to exactly what I would do if I could go back in time and lay myself out a plan to become profitable within a year. This is what I would tell myself. This is what I would have taken back in time using the DeLorean and given myself back in 2013. So with that said, I wish you all the best of luck in your trading. I hope you enjoyed this video, and I'll talk to you in the next one. See you soon.